You have likely heard the story of David and Goliath. David was the small warrior that beat a very large, powerful warrior in Goliath. And that may be happening with Robinhood taking on the big brokerages and really making them go their way, changed to their format. And you could see that when they came out and they started offering free trades, everybody had to do free trades. They have a more gamification platform where young users, young investors really like Robinhood. Robinhood also trades cryptocurrencies, which is a new investment class altogether. All these things are really exciting, and they're the reasons why I invest in Robinhood. I think they're cutting a piece of the market away from everyone else and are going to dominate the younger investor market. I really believe in their story and have invested for some time. For the past year, it's been a good investment. The stock's up more than 80%, which is great. And their earnings were really positive. They had good growth, very good organic growth in certain markets. And I wanted to take a look at their fundamentals. I wanted to look at that earnings report, update my valuation of Robinhood, and share with you what I plan to do with this stock, whether I'm going to buy more shares, just hold my shares, or sell my shares in Robinhood. Before I jump into that, just a quick reminder that I'm an individual investor. I like sharing my analysis on YouTube, and I like sharing my opinions, my conclusions, my plans with Robinhood stock. I am not recommending you buy Robinhood stock. I'm not recommending you sell it. I'm not providing any financial advice. Please make those decisions very carefully. Now let's take a look at Robinhood. Fundamentally, it's a $14 billion market cap company. So this is a small mid cap company, has a lot of room to go up. And it's small enough to be acquired. If you imagine a big financial services company might want to acquire Robinhood since they're very different and really tap into a marketplace that the traditional brokerages and traditional financial services companies, frankly, they're not put together to go after the younger investor. The revenue is 2 billion, so you're paying about 7 times revenue. Their forward P is pretty high at 58. That's because it's a growing company. A lot of analysts cover Robinhood. They have a hold rating, but their price target is 21% above the current stock price. And that might be because the stock's been going up so much. The stock goes up more than 80% over the course of a year. Analysts might be waiting for the fundamentals to catch up with the stock price. When we look at their financials, the income has really grown. In 2023, it really grew. They contracted in 2022, but that's more because the stock market was really selling off in 2022 and people were really afraid to invest. So I think that was more to do with the marketplace versus a company operating poorly. I think that Robinhood introduced new products, savings accounts, new reasons why an investor wants to visit the Robinhood platform in 2023. And it really worked. They grew 33%. Nice work. I really like their cash flow. For a young company to produce very high cash flow is great. They produced $1.1 billion of cash from operations in 2023. They don't have to put a lot of capital back into the business. In fact, they only had to put in $21 million of capital back into the business. So they had a net free cash flow in 2023 above $1.1 billion, which is phenomenal for a young business to do this. I'm going to use that in my valuation of the company when I value based on free cash flows. Now let's take a look at earnings per share. 14 analysts cover the company, and the average earnings per share expected for the company will be 29 cents for 2024. Not a big earnings per share because it is a young company and they haven't found their profitability yet, but I imagine they will in the future. And that 29 cents is going to grow by 41% in 2025 and then come down a bit in 2026. Overall, I'm going to use the expected earnings per share in my valuation model and then price the company stock based on free cash flows. That's going to be a majority of my estimate, and also earnings per share. Taking a look at the earnings report that was issued out for the first quarter of 2024, there's a lot of good news in the earnings. To begin with, the revenues went up 40%. If you look at the quarter that just closed, that's phenomenal. Great growth. Looking at their net income, good net income. EBITDA up 115%. Cash and cash equivalents went up. And overall, their free cash flow really increased to above $1 billion. So as expected, after their earnings, the stock really rose. What's interesting is the stock also fell for the last 2 trading days. So I'd like to really understand, well, what gives? How come they're doing so well, but the stock market's selling off? It might be more of the stock market's priced really high and investors are being really careful right now. But overall, Q1 shows that Robinhood as a business is doing really well. So what do I think each share of Robinhood is worth? Well, I'd like to get to that conclusion And I'm going to get there by looking at the company's free cash flows, doing a forecast, and then discounting all the cash flows I expect the company is going to produce to a net present value in today's dollars. I'm also going to look at their earnings per share. Let me take a look at free cash flows first. I'm going to start with a forecast that I believe they're going to probably exceed. I expect that this year they're going to do $800 million of free cash flow. That's a very conservative number, but I'm willing to start there in my forecast. I'm going to grow the first 3 years after this year by 20%. Then all years after year 4, I'm going to grow by 5%. And I'm going to discount all those free cash flows I expect in the future by 10% to arrive at a net present value of all those free cash flows of $21.3 billion. I'm going to add cash that's on the balance sheet, $4.8 billion of cash on the balance sheet, which increases the equity value of the company to $26.1 billion. The market cap of Robinhood is $14.3 billion. When I look at the valuation difference between where I'm getting from a free cash flow perspective to the market cap, it offers a nice 83% discount on the stock, a very good discount. Looking at earnings per share, they expect to do 29 cents per share this year. I'm going to have very high PE because of their growth rate. Their growth rate is awesome. So they deserve a very high PE. And I expect they're going to grow long-term their earnings per share by 10%. That gets me to a per share value based on earnings per share, $15.31, but the stock is trading at $16.23. So it's actually being sold at a slight premium if you look at earnings per share. I blend the two, but I believe that free cash flow is the standard that most great value investors have used. And I put more weight on free cash flow method, 2/3 of free cash flow method, and then 1/3 of earnings per share. And I get a 54% blended discount on Robinhood, which is a nice discount on this growth company. So should I increase the shares that I own in Robinhood, just hold my shares, or even sell part or all of my shares in Robinhood? Well, I'm going to get to that conclusion by looking at 3 areas. First is the company. Am I still bought into the company? Second is the balance sheet. Do I still believe they have a good balance sheet? And then discount. Is it a good time to buy? Is there a discount on the stock? So first, with regard to the company, I really like that they have separated themselves from the other financial services companies. They're not like, the traditional companies that are brokerages doing it their way and just trying to do it better. No, they went a completely different direction and are doing it the Robinhood way and serving an investor population that probably gets ignored or probably gets underserved. They're doing a great job in doing so. That creates, I think, differentiation for them, and it really helps them get a lifelong investor customer. And I think overall, it's been a brilliant strategy. Their management team's excellent, very innovative, really constantly growing the types of products they have, the memberships that customers could have with the company. So I really like the company. I really, really like the company. And the balance sheet's excellent. They have no debt. They produce free cash flow. They have close to $5 billion of cash. They get to borrow or use funds that customers deposit and make money on it. So the balance sheet's in great health. Love the balance sheet. So we're 2 for 2 so far. And now discount. Really nice discount on Robinhood. A 54% discount on a high growth company that I believe is going places is a great discount. I'm going to be buying additional shares of Robinhood. I had a hold position on Robinhood, but that has changed. I'm going to be buying shares. One more added piece of value. Robinhood at their current valuation, in my opinion, is a really good takeover target. If you look at a JP Morgan that is massive, they would love to have Robinhood. JP Morgan is a legacy financial services company. They're a great company, but they're probably not identifying with the younger investor. And as investors, mature, when they go from, 35, to 45, they accumulate a lot of wealth. And I think Robinhood is really going to start growing as their customers continue to mature in their investing journey and continue to save and have more wealth, more invested with Robinhood. I think it's a great plan. And another business, a bigger business, would love to acquire Robinhood because they would get that access to that big population of investors and customers. Thank you for watching the video. I hope you found it interesting. It's always fun to cover a company that is innovative and doing it a different way and watching them succeed. Congratulations to the Robinhood team. It's great to see them pull it off. They've done a lot of things that have benefited all investors, including, zero cost trades. Thanks Robinhood. There's a lot of things that they're going to innovate and really force the rest of the market to do. And it's really fun to see them continue to exercise their creativity in the marketplace. Thanks again for watching.